excited to be with you and to be able to tackle this topic of ESG risk. And we've got, I think, what you're going to find to be a terrific panel. You know, I would say to the panel that, and we had some conversation about this ahead of time, that collectively here in the room and all of those who are joining us online, we have a real diversity of maturity. So we have folks in the audience who are at different stages of maturity in their ESG journey. And so I want to ask the panelists to offer their insights to you. So if you're just getting started, what are some good resources that you could point them to or that they should be looking for? And I'm going to ask Kristen to take this one first, if you would.
Sure. Yeah, I think this is such an important question. I was sharing when we were discussing before this panel, when we come in as external advisors, helping a company, regardless of where they are on the ESG maturity, one of our first questions is, what is the role of internal audit? There might be different entry points when internal audit gets pulled in, but I think it's so important as we're starting to see this emphasis on ESG climate in particular, the translation to climate risk is financial risk. And when you think about the role and the remit of internal audit and how critical internal audit is in really drawing that intersection with risk as well as compliance as the market continues to evolve, regulatory policy developments continue to evolve, you know, what is that systematic, disciplined approach to better anticipating, understanding how the market dynamics and market conditions are evolving, and how to really ensure that there is that intersection with where compliance requirements are headed, but how to continue to anchor on the risk and opportunity to the organization. So I think some of the resources that Bob even mentioned as we think about applying a similar discipline and methodologies and approaches to ESG risks as they manifest differently for different organizations, somewhat no different than you would apply those disciplined approaches to other emerging risks to the organization. I think as it relates to, in particular, the SEC's climate proposal, which has, I think, been a really important accelerator to elevate the attention within organizations around governance, around control environment, around the integration of ESG considerations into the business. This is where internal audit is in the spotlight and very much in a meaningful and a strategic way. And so I think thinking about materiality and how do you think, you know, broadening that aperture of information, you know, data, insights that can be brought to bear in terms of evaluating and continuing to put that set of controls around a broader universe of information that might not have historically fallen under a traditional governance structure or disclosure controls and procedures. And so I think there's just a huge opportunity to really unpack and better understand where some of these market levers, these market pressures, regulatory and otherwise, are how they're taking shape, and better understanding the applicability to the business while leveraging the tools that already exist today for internal auditors in particular. So it really gets down to the ability to translate climate-related ESG factors into relevance, applicability, implications for the business, and then how do you prioritize the necessary infrastructure from a roles, responsibilities, the right competence, the systems, the processes, the controls to really better generate more meaningful, reliable information for external disclosure, but even more importantly, how to really access higher quality, more accurate information to really drive internal management and decision making. So I think it's just such an important point in the market today and such a tremendous opportunity for this audience.
Good. Not to put you on the spot, but has Deloitte put out something recently that you say, hey, this is a piece you ought to pick up and read?
We have, and actually we do have 7 key questions that you should be asking from an internal governance perspective around the SEC's proposal and how you can prepare as a proxy for broader expectations and compliance obligations.
Sure. Good. Great. Bob.
So really to go back to the beginning, and Rob's going to have some great stories for you. So might sound kind of funny, but figure out if you actually have an ESG report and what it says. And if you don't have one, even begin to look at what have we said about ourselves related to people and the environment. And you may find some of that in the risk factors. So first of all, what are you already saying? One of the fastest ways for you to get up to speed is to look at what other companies are reporting and what leading companies are reporting. So, pick companies that you compete with that maybe are bigger than you. Just pick the name of 2 or 3 companies that you always have thought of as great companies and really look at what they're doing. You'll learn a lot there. Certainly with the work that Kristen has done through her firm and the other firms, there's resources like that. There's newsletters. There's material you could get out to your audit committee on these things. The IIA now has some good material. They have a good publication on the role of internal audit related to ESG reporting. It talks about the advisory activities you might do, talks about the objective assurance activities you might do. And then maybe a little plug for SASB. If you go to sasb.org, you'll see the way that SASB has divided the world into 11 sectors and 77 industries. And if you're not already following the SASB standards, you could go to the standards section and put in your ticker symbol or your company name. It will map you to the sector, and you'll be able to download those standards for free. And so I think what you would do with that is say, okay, if that's what SASB is suggesting is disclosed, do I think we could do that? How hard would that be to do? So I think there's a lot of ways you can educate yourself. There's a lot of good materials. In fact, there are now starting to be certification programs or certificate programs in ESG. So again, I'd encourage you to volunteer yourself and your time. You have the opportunity to be as good as anybody around this topic because it's new. And that's what you want to take advantage of. So it's now no longer that you have this many years of experience. It's how can you get quickly better, deeper experience on this new topic. So lots of materials out there for you to get your arms around. But I think Rob's at a really interesting point at his company where he's getting his arms around this.
Let me just do one follow-up question with you first. So, Bob, I know you're always one who'll give it to us straight. So if you've got folks out there who say, my company just doesn't have any environmental risks, and I just don't think this is something we need to really be concerned about, what would your response be?
Yeah, so what I find is, especially the big people, right, the audit committee and the management, they just hate it if they don't look as good as other people. So I think in some of the work that I've done where we have shown different people what their competitors are doing, it really exercises them a lot. So I think that is a really good thing. And I think there's also some studies out there that would show, and we can argue where the stock market is now, but if you focused on these items and have a story to tell, you can actually borrow money at a lower interest rate through sustainability-linked loans. It's in writing, most insurance companies now provide a lower director and officer insurance premium if you have certain ESG things that you're doing. When you begin to look at your packaging and your suppliers and things like that, there's studies that show companies make more money. But I think the biggest thing I would put out is, hey, look what so-and-so is doing. Have we, and don't chastise, have we thought about that? That would be my advice, Richard.
All right, good, thank you. So Rob, I think it could be argued maybe that you get your hands really dirty with this topic because you guys are, kind of a transportation company. So what's your advice to our audience?
So I think the little bit different perspective, and I think they mentioned a lot of the big things I would go after, the SASBs, the frameworks, all that are out there, and that's where we started. But I think the other perspective, especially being kind of a middle market, not a large, multi-conglomerate company, is trying to figure out really what your customers are asking for. Because that's kind of a lot what kind of kicked our program off, is that our customers started asking these questions because they're meeting these frameworks. And those frameworks require you. What are your vendors doing? How are you shipping your stuff? What is your kind of environment in that level 3? And that's kind of what pushed us to start going down that. So I think going out and doing a catalog of the surveys. I mean, most of us are probably getting surveys from our customers, asking these questions, and going through that and starting there. And that's kind of been our most focus, because we also talk about how we get involved, the senior management, how do we get their ear? It's like, what's the value add? And that's really the value add is, hey, we're appeasing our customers. We're meeting that customer objectives. And then you start rolling that into, hey, we know their requirements are coming down for financial reporting, being a public company, and all that kind of has to happen. But having that front is kind of where I would say.
Yeah, so obviously being in the transportation side with a lot of, how many vehicles did you say you guys have?
I think we're at about a little over 5,000, 5,800. I should know that. They just told us last week.
So you got over 5,000 vehicles out there on the road every day. You've got, you mentioned, you know, a lot of the spare parts and tires and everything. You've got a lot of environmental risk. And so is it something you would say comprises a lot of your internal audit effort?
Yeah, I think it's I think the hardest part, and we were talking backstage about that, is really focusing on what the really value add, right? So obviously we do have some environmental impacts on our trucks, burning diesel, running on the roads, doing the mileage. And of course, as a company, and I think it's trying to burn less diesel, and that's just good business practice, but trying to figure out what that story is, right? Because there's so many different avenues and levers to pull when it comes to ESG. What's that true story? What do we want to go after? Do we want to say, hey, we're going to be focused on electric trucks, things like that? But there's a lot of implications, costs, things like that involve that, but looking and diving into those. So a lot of our focus really is more on those other levels that we know we're doing well, is our people aspects, our investments in those, D&I, all those kind of levers, right? Not just so much on that piece. We do that piece, we have smart ways, we do all those, but that's kind of the secondary tier for us.
Sure, okay, good, thank you. So the next question I want to get a response from our panel, and again, I just want to remind you, please send your questions in. You can send them to the entire panel, or you can earmark them for anyone on the panel, and I'll be taking those questions up shortly. But I would just say, to sort of preface this question, that a lot of folks who are attending this conference, both in person and virtually, are looking at ESG through an internal audit lens. And I guess my question for the panel, and I'm going to start with Bob, is how should internal audit leaders go about layering ESG components into their audit plan, and the same for risk leaders? How should risk leaders be layering ESG into their broader enterprise risk management strategy? So,
well, yeah, Richard Kelsey. So first of all, again, a COSO plug, we have this document to provide guidance. How do you think about these ESG factors? And use the ERM framework to help you through that. So I'd urge you to get that. There's an executive summary, probably too long for the audit committee because it's 8 pages long, but that's free. And then the full 100-page, document is available. So that's one place to start. The other thing, again, do you have a report? What does the report say? What are the big items? And I've got a strong view that, yes, the controls are really important over time. But there's a report out there with a number of numbers there. There's some immediate validation that I think you need to begin to think about if you haven't really done that. I think another way is to look already in your existing reporting. So in the 10K, you probably have some risk factors that are related to the environment. So that's something obviously your company said is a risk factor. How are you covering that in the audit plan? For those of you that have not followed the SASB standards, you could look up those standards for your industry. The thought process of those standards is those are the standards that through multiple interviews, investors believe are the likely to be material items for that industry. So that's a way, you want to start with the big stuff. And then I guess my view, and I would want Kristen's view, ultimately, yes, this needs to be part and parcel of your singular enterprise risk management framework, process, risk assessment. If you try to jam it all together, the ESG stuff kind of gets lost, and you're not as good at that. So I'd really encourage you, sounds a little efficient, keep doing your ERM activity, but try to do something separate related to ESG. Now, again, if you have a report, and to Rob's point, the material items have been identified through what people call stakeholder engagement. You have a little bit of your roadmap there. So I would say get some of these materials, do something a little bit separate, look for those most important items, and then begin to get them layered into your overall audit plan and ERM program.
Mm-hmm.
Okay, thanks. So Rob, this, it's real and tangible to you. So what advice do you give somebody about how you integrate ESG in the internal audit plan?
Yeah, I think you touched on a lot of that, starting with the frameworks of SASBs and what the reports are out there and which numbers you need to audit. But I think the biggest thing is going out there when you go to the SASB frameworks, there's a lot, right? And I think one, as you go catalog out, what exactly were you already doing the day, right? There's going to be things the company's going to need to change or numbers we're going to have to develop. But there's probably a lot of those things, if you go talk to the sales and the different teams, we're already putting out somewhere else. Maybe it's not in our sustainability report, but it's in our customer surveys. Or maybe it's just talking points, things like that, and finding those numbers and getting a catalog of those. And that's kind of what we started building out. Here's our catalog of those things. And then going, what do we need to do about those? How are those numbers being calculated? Is it an easy number? Is it something pulled out of a report? Do we need to look at the systems? All those kind of things, and started that piece. And then starting putting some objectives around that and giving that value add to, hey, we're going to make sure that number's right every time it goes out, right? And then the other thing, sustainability, the other thing I'll caution you to do is make sure you take that and compare that to your financial statements, right? So a good example, some of the things you see is we'd put out a report in our financial, it says we have 5,000 trucks. Well, then you look at our sustainability report, it might say we have 4,000 trucks. You read those side by side, you get a little confused, right? It may just be a timing issue. It may be how we're looking at the trucks, things like that. So making sure those numbers too. So those kind of critical key components is where kind of audit starts and adds value there.
So even reporting risks are something you guys have on your radar.
Yeah, 100%. I think that's the biggest thing is trying to make sure that clear message, right? Because I think that's where you see a lot of companies, and I guess the term out there, greenwashing, throwing out numbers. They're not meaning to, but they throw out these numbers, but they don't really understand where they're coming from. And they say, hey, well, sales gave me that number. We threw it out. We put it in a report. We put some nice marketing material around it. It looked great. And then people say, okay, well, why does that align to here? And that's where that big risk starts coming out on an immediate side.
Thanks. I think good advice. Kristen, you work with a lot of clients. What advice do you give?
Yeah, I think I would just build on both Rob and Bob's points in terms of, as I mentioned before, one of our first questions is always, what role does internal audit have today, or what role is planned for internal audit? I think it's really critical to start with what is the current inventory? What's the current state of disclosure to better understand and surface some of those potential exposures that might not otherwise have an ability to elevate to the right level of attention. I think increasingly as well, and this gets back to the value add opportunity from an internal audit perspective, I think increasingly the absence of disclosure. While we know 92% of the S&P 500 provide some form of disclosure, probably some organizations represented in this room, sit within organizations where you don't have disclosure. And I think this is a really important risk connection point where internal audit can play a critical role. The absence of disclosure is translated to hidden risk. Given this hyper-transparent market, the universe of these raters, rankers who are accessing, collecting, and creating a risk profile for organizations based on the absence or the insufficiency of disclosure. So I think there's sort of both sides of the angle in terms of that entry point for internal audit to jump in and add immediate value. And then I think, again, to both points previously, once you have a command of what information is being reported, isn't being reported, an understanding of what is the control environment that exists today, that's where then you can really start to draw insights and think about, to Bob's point, in a number of cases, the results of your ESG materiality assessment don't always translate one for one to your enterprise risk assessment. In a lot of cases, ESG-related risks are really manifest as drivers of more traditional enterprise risks: financial, legal, reputational, operational risks. In some cases, like physical risk from climate, those risks manifest differently, and really, in many cases, can and should represent their own line on the risk register, because they really demonstrate attributes that are unique to other risks, require different responses, and different accountability and monitoring mechanisms and data considerations. So I think, based on that entry point and the role that internal audit can play and surface insights, that's where you can really lean into a broader enterprise risk, a meaningful discussion around how these factors influence enterprise risk, and then how that really helps to shape and inform the strategy and strategic choices of the organization.
Richard, let me just get people to think a little bit about one of the things that's different about ESG reporting anyways. Unlike the financial statements, it's baseline information, but there's a lot of forward-looking information. There's goals and targets. So one of the things I'd like you to get focused on, and it may just be in earnings calls or in marketing material, there's a number of commitments and goals and targets that companies set. That's everything from, you heard, we're going to be carbon neutral by such and such a year, or we're going to have this percentage of women in management positions, or we're going to, change this thing. So I think there's a real risk, of course, if you make that commitment and target and don't get there. So more and more companies now are disclosing their interim progress on those things. And then, certainly, I also want to say, don't forget ITGC around, because there are different systems now that heretofore haven't been in play that are doing. But when you think about the risks, I'd just like you to think about, if you really step back and think about what are the business risks around this, to your point about ratings and rankings and investors, you get a lower valuation because you don't have a story to tell, or you're not telling your story, so you're worth less. You pay more for your borrowings because you're not getting these sustainability-linked loans or advantages. Your employees aren't staying with you as long, or it's harder to attract them because, to my point of the competition, they have a better story, or they have a story that you're not telling. Right. Your insurance cost, as I mentioned, could be higher. Rob mentioned to me today, they have large customers. Now, they're also a public company, but even private companies with large public company clients, the customer is saying, you need to do this, or. So there's revenue implications to this. And then there are activists as well, that we don't have a story, so, the activists are there. And then I guess I would also leave with, over time, as we get to regulation and the SEC rule, and we think about our role, there will be a compliance notion to some of these things, because they will be an SEC rule, or there'll be a particular regional regulation. So there are plenty of real business risks to this topic.
I'm going to ask each of our panelists to sort of hone in on their particular area of expertise. I want to start with Rob. Rob, as a chief audit executive, what have been the biggest challenges that you have faced in rolling out and in sustaining your ESG program? Any insights that might help somebody here who's in a similar situation?
Yeah, I think one of the things, the starting point is, we talked about earlier, is building that catalog of what you need based on the frameworks, based on customer requests, all the things we talked about. The hard part is mapping those, because what you'll find out is when you go through that catalog, it's going to be a pretty large catalog of things that you may need to focus on, right? And trying to combine those. And the other hard part is trying to connect those questions that are kind of similar and maybe the same answer, but you have to map all those, right? That's one of the big tasks, because obviously we want the same answer across the board. So that's one of the first things that was really difficult. We are working with the audit board to try to build that out in the ESG module. It should help connect a lot of those things, because the goal is to be able to go, hey, this is our issue, here's the answer, pull it in there, right? That's task number one. The other two is, like you said, trying to figure out what you focus on, right? And we talked about, and y'all mentioned a lot of different stakeholders. What stakeholders are really the driving for your company? That's the other hard part, right? You have activists. Do they matter? Do you want to focus on that? Because the problem with it, there's so many stakeholders, you can't focus on them all. And if you do, you'll get overwhelmed trying to meet all the demands of every different. Same thing with your customers. You can't meet every demand of every customer. So you have to find that story. And that story has been the difficult part of trying to figure out what's our true story, what do we want to meet at, and you also can't just say, hey, customer, sorry, that's not part of our story, so we don't care about that, especially if your customers are your Walmarts or your larger companies that kind of drive that. That's been the two big things. And that's something, like I said, staying in tune with the market changes, staying with the regulations. The other hard part I would say is with the SEC coming up. Like I said, when it came up, it was a hot topic. It's coming out in the next few months. Obviously, audit committee, the boards, all, hey, we got to do this, right? That starts getting pushed out, then that kind of buy-in starts drifting off too, right? But the problem is you can't wait till it's fully rolled out and saying, hey, now we're going to do it, because you're behind the 8 ball. So it's trying to keep that demand in, but also finding what your true story is going to be.
Oh, I think great insight. Kristen, how are the firms thinking about ESG over the next 5 years? And obviously, you're going to know for sure how Deloitte may be thinking about it, but should this be owned by the existing audit, risk, and compliance teams, or should ESG be stood up as some sort of separate program within companies and organizations?
Yeah. Well, I mean, as a firm and clearly the efforts that the profession collectively are continuing to help to support and really shape, when you think about our public interest role in serving the capital markets, right? Driving trust, driving confidence. And as the expectation of the capital markets, investors and other stakeholders changes in terms of information necessary to assign value, assign premiums, assign penalties, we clearly as a profession have to evolve, and we are evolving rapidly to better equip our professionals. I think the SEC's proposal certainly was a critical inflection point in kind of elevating that point I made. Climate risk is financial risk. And the intersection with the broadening of disclosure that's really informing, as we said, these, the universe in the capital markets with data that they increasingly can translate to financial implications. The introduction of the financial statement line item elements within the proposal, again, it is just a proposal, as we know, it's gotten a lot of attention, really elevated, I think, the attention to the role of the financial statement auditor, the role of finance within corporate preparers around, this is no longer just sort of standalone information that's sort of assembled at a point in time during the year and packaged in a communication. This is very central to this information to be valuable to external stakeholders and to the organization, needs to be integrated into the business and broader implications given a broader universe of information to translate this information to what are the implications to traditional financial reporting. So clearly the role that financial statement auditors play in helping to think differently and more strategically about risk and how that can manifest has become central. And the way we interact with different leaders within the organization has definitely changed. The role of finance, the role of risk, the role of internal audit and compliance more broadly is much more central to every conversation we're having. And I think, Rob, to your point, the way that the audit committee is engaging differently. Again, another really strategic opportunity for internal audit teams to help drive that connectivity across the parts of the business that are going to be so much more central to driving high quality disclosure, reliable disclosure that will withstand the scrutiny of the capital markets. I think the final point is in terms of who owns this, right? From an overall governance perspective, to truly integrate ESG, climate-related considerations into the business, into the risk considerations, strategy, governance, measurement reporting, it's got to be sort of an all hands on deck. It's the audit, risk, compliance, finance organization plays a critical role. Operations, strategy, talent, marketing, all parts of the organization need to have a seat at the same table to really provide that holistic governance perspective. There are critical roles that different parts will play going forward in different, sets of responsibilities and accountability. So we're certainly going to see finance, audit, risk, and compliance become much more central, but not exclusively, right? It's got to be a highly coordinated and a connected set of activities to truly drive the performance that's going to be needed.
Okay, great, good. Thanks for that insight. So Bob, I think I speak for a lot of people in the room here when I just say help. Can you explain all of these alphabet soup components? So, we've got we got SASB, we got ISSB, CSRD. Can you quickly help make some sense out of all of this for us?
I will totally clear it up for you.
Oh, okay.
So first thing I think what's really important to understand, all of this reporting that's gone on to date has been voluntary. You could argue Larry Fink is a de facto regulator, but people have been doing it without any hard-coded regulation, so that's interesting. Also remember, when anything new gets started, there's a lot of entrants. Go back and how many personal computer makers were there? How many cell phone companies were there? How many airline and auto manufacturers were there? So there was an alphabet soup of all of those things as well, and over time they converge. And so if we've had this alphabet soup where people like to talk about it as it's pieces to the puzzle. So there is some convergence, and I want you to think about it this way. and Kristen can always disagree with me. The financial reporting world has two solar systems. It has US GAAP and the SEC for US stock exchange companies. It has IFRS for the rest of the world, more or less, which is about 140 jurisdictions or countries around the world. And for those of you that are old enough, over on this hand, there used to be country-by-country GAAP. Norway had its own generally accepted accounting principles as Japan. So they solved the convergence there, and we've sort of solved it here. And it's sort of going on like that. You know, there is a kumbaya view. Wouldn't it be wonderful to just have one? I'm not sure we're going to get there, but let me work over here. So the ISSB is the International Sustainability Standards Board. It is exact mirror image board to the board at the IFRS Foundation that sets the financial reporting standards. So the whole idea is we'll do the same thing that we do for financial reporting standards. We'll create sustainability standards. There are 2 standards already out that have got exposure, public comments finished. And the idea that once that's set up in London, the other jurisdictions then get to voluntarily adopt these. So that's kind of where that's going, okay? And then we have, you know, the US GAAP, the FASB, bless their heart, has said they're too busy to deal with this topic. So the SEC has taken it on. And so I think for a while there's going to be the ISSB. That's going to move along probably deeper and further than the U.S. with what they've done already. And then, as Kristen has talked about, we're going to have this SEC rule. So the SASB, just to clarify things, SASB, which did a great job, has these industry-based standards, got acquired by the ISSB. So it's as I say, over there now. It's interesting, though, that gave Kristen a new number, 410, so more than 80% of the S&P 500 report using the SASB disclosure. So there has been some convergence. There's a view that SASB had a whole set of acronyms like the Value Reporting Foundation and CDSB and the Integrated Reporting Council. That has all kind of moved into the ISSB. So we have, I think now, two big pieces. And will we have one? I wouldn't bet on it. Kristen, what do you think?
I completely agree with the picture that you painted. It's evolving. It will continue to evolve. The concept with this ISSB is to really be responsive to the market expectation for convergence, right? The noisy landscape. So there's tremendous progress that's already been made with the sort of coming together of a number of the standards. The idea is to start with a baseline, a global baseline that can be a starting point with an industry lens. We know that industry becomes so important, and that's where SASB is critical. But it's not, I don't think the ambition of the ISSB has ever been to solve for this messy capital markets infrastructure. But it's a critical starting point for companies, especially those of you who operate globally. You want to have a common baseline to drive clarity, to drive activation, to drive governance, and then recognizing the dynamic of the various different jurisdictions in which you operate. Where are some of those requirements and objectives going to show up, and then how do you build on to that common baseline? So I think we're highly optimistic that this international baseline, no other authoritative sustainability standards board exists today. Very different from financial reporting. And so I think, as we follow very closely where the SEC might come into this conversation, it's important to note as well that the SEC sits on the monitoring board that oversees the IFRS Foundation, so is highly engaged in this whole market infrastructure that's taking shape. The IOSCO, the International Organization of Securities Commissions, is highly engaged and was really one of the catalysts around standing up this organization. So really, really important to really stay focused on where the ISSB heads as really an important, helpful accelerator for preparedness to begin to prepare for regulatory and policy developments around the world.
Kristen, let's just confuse people a little bit with another little. I was
going to say, we're really making progress here with this alphabet.
Yeah. So there is one little tweak. Remember, I've got my 2 hands, my 2 solar systems. There's this thing called the CSRD. The Corporate Sustainability Reporting Directive. And Kristen is going to give you the real expertise on this, but it sort of sits in the middle, and the EU has decided that we've got all of our sustainability stuff going on, but we have these U.S. companies that operate on our turf. and they're pretty big. So this CSRD thing would require some U.S. stock exchange companies, heretofore been kind of exempt from the EU-related things, would have to report some sustainability-related matters according to that part of the alphabet soup. And that's a real overview. So Kristen, you want to kind of add to that?
Sure. It's a really important point, and one that I don't think many U.S. companies have really paid a lot of attention to. As Bob mentioned, the EU ambition is a very clear policy ambition, net zero by 2050. All of the regulatory and legislative elements that are taking shape under that are in pursuit of that ambition. And so it's a very much a broader remit, much more prescriptive, and this is going to many U.S. organizations are going to fall under this expectation. I would just go back to the importance of the ISSB as a global baseline. There's a lot of collaboration going on. We really hope to see and are optimistic that we will see some sort of a commitment to collaborate and work together. So it's not as though we do create this competing market infrastructure, but rather a complementary market infrastructure. So I'd go back to the same point I made just a minute ago, really focus on the ISSB. You need to stay close if you're exposed in the European jurisdictions to where the ESRS and the EFRAG organization is headed, but ISSB should serve as that common baseline.
And Rob is wiping his brow because he doesn't have any non-U.S. operations. So.
Yeah, there's already a lot of flavors of the month and trying to keep up with everything. So, yeah, definitely makes it a lot easier to try to keep up that. But doesn't mean we won't get impacted. That's the other problem, right? Because the larger companies will come ask those questions still. So you'll have to be ready and willing to answer those.
Exactly.
So Rob, here's a question. The kind of work that needs to be done related to ESG may be a little different than some of the other risks internal audit tackles. Are there any skills or attributes that you find that your audit team, the members bring that really help in this particular area? So is there something that differentiates those that are going to be really successful when it comes to auditing ESG-related risks?
Yeah, I think the biggest thing is kind of that next step, diving deeper in the real meaning of it, right? I think the assurance part was here's the calculation, A, B, is easy. But I think really getting to the core of what we're trying to build with ESG is like, hey, what's that really value add? How does lowering our carbon footprint change anything, right? So trying to have that skill set of digging deeper, understanding the reason why, because sometimes as auditors, we don't always go deep enough. We just say, hey, we do it, they calculate this way, and they calculated it right. We're good to go, right? But I think management in this environment is looking for more. Why should we do that? Why should I collect all my electric bills? What value is that going to add? Is it just a regulation? And there's going to be some of that, yeah, we just got to check the box, right? But there's also going to be, hey, that story helps change this. It helps change behavior from our company. It lowers our electric bill. There's some cost savings. There's all that. And trying to understand that piece and having that skill set's different. And also being able to tell the message. I mean, communication's always been a very important part of internal audit. But being able to take that, sit down with management leadership and tell the story of what that's doing, why it's doing that, and where that data is collecting.
At this juncture, Rob, in the evolution of ESG, do you think internal audit's role is more appropriate assurance or advice?
I think right now it's more in that consulting and trying to help them unsolve the spaghetti. Because like I said, we talked about it. There's lots of different regulations. There's lots of different approaches. It's trying to understand that and consult on that and help the business understand that, right? And I think that's where internal audit has that lens. Because if you look at that and you start going through the regulations, those impacts are throughout the whole company. The sales team has impacts. You talk about downstream, your scope 3. That's flying, all those things. Usually your sales teams for companies, that's maybe your bigger impact. And understanding that. Your drivers, all those different things are throughout the company. And connecting all those together is where internal audit drives that value, right? And they know the people to go talk to. They say, who do we get the electric bills from?
Right.
Who do we get the number of travel? How much we're traveling? All those kind of questions. That's what internal audit brings to the table.
You know, it always amazes me when I facilitate these panels how fast it goes. And we're coming close to the end of our time together. And what I wanted to do is just to ask each of our panelists to kind of in closing, leave us with some of your thoughts regarding the audit professional. Can you articulate what you think some of the biggest opportunities are and some of the risks for internal audit when it comes to the ESG space going forward? And I'm going to ask Bob to open it up, and we'll work back this way on the panel.
Yeah. Well, Richard, I always go back to the definition of internal auditing, which is so good. So my advice, first of all, I'll say it, first of all, lead and add value. Remember, this is a new thing. You can be the leader on this. You can bring and educate your company in doing those things. Certainly the risks are important, and we don't want those to, occur, and we want to understand their probability and our controls around that. Let's just flip it to the positive. Look at the opportunity that internal audit has, because it understands the business, to look at the ESG programs and, not run the business, but suggest, why don't we look at packaging? Why don't we look at having a better story so we get a sustainable linked loan? So I think for every one of those risks that I kind of listed, lower valuation, low, turnover, not attracting people, not telling your story, there's a flip side. So I'd like you to think about this as the opportunity for you to lead and to make your company a better business while you're also thinking about the risks. So there's tremendous operational improvement opportunities that exist there.
Great. Good. Yeah. Thank you for that. Kristen,
yeah.
We were talking earlier about this, as you look forward, if you had a crystal ball, any advice you would give to internal audit practitioners in particular, but even to our risk management friends and compliance folks about what the opportunities are and the risks that lie ahead.
Yeah. Well, this whole ESG evolution is truly one of, if not the biggest business transformation opportunity of a generation or more, as well as the biggest capital markets transformation in quite some time. And, when you think about the opportunity to unlock capital within organizations, within the capital markets more broadly, it has to be underpinned by governance, high quality information, a very systematic approach to understanding, prioritizing risks, and the calculated risks that companies want to take and the strategic risks that companies want to take. And so all of that is so foundational to the role of those professionals in this room. And it's just such a tremendous opportunity. And I think it's that shifting the mindset from sort of compliance and regulation from a burden sort of a sentiment to how transparency can drive insights, drive accountability, and ultimately trust.
Great. Rob?
Yeah, so I think touching on that on the internal audit side, you kind of alluded to that. And it's kind of, to me, is the kind of same story when like SOX came alive, right? SOX came and people were like, oh, this is just a regulatory burden. We don't want to do this. People fled. People try to get out of it, right? But trying to develop that story of the reason why, right? And not just, hey, we have to have control for control purposes, but here's why that control actually helps us, right? Kind of what you alluded to is the value we're going to be able to get from that is this, and this is how that adds value to our bottom line, right? And trying to tell that story. And it's either adding for revenue purposes, as we talked about, us focusing on our customers' needs, but also could add to the ROIs, right? Here's how we can lower that footprint, but just lowering that footprint, it's not just lowering it, it's also cutting costs. And it's going to help us be more successful as a business. And I think that's what audit has the opportunity to do in the next year or two, because it is very new. We have that time to develop that story and start telling that story throughout the whole company, right? And not only being able to tell that at the management level, because I think that's going to be an easier story, because that's already coming out. People are seeing, the white papers, things like that. But telling that to the people, the staff, because that's really who's going to be doing these things and talking to them and saying, here's why you're keeping up with your carbon footprint. Here's why you're keeping up with their electric bills. And this is why, and trying to tell that message.
Wow, great insights all the way around. Something that Bob made mention of earlier, I think should resonate, but it should also alert. Bob made the point that pretty much everything related to ESG and the environmental piece in particular up to this point has been voluntary. But it's quite clear, and I think certainly from some of the points that Kristen's made, that that's not going to remain the case. We're moving from a voluntary phase into more of a mandatory phase. And that's where the compliance risks become real. And that's where every one of us here, whether we're internal audit, whether we're risk management, or whether we're compliance, compliance risks always comprise a very significant part of an organization's risk portfolio. And it's quite evident that we are migrating to a stage where ESG, and particularly the environmental, but the social justice, equity, inclusion, and governance, it's all going to become a significant compliance risk going forward. And so I hope that what you've been able to take away from the discussion with this great panel is that the time for you to start to think about this, get this on your radar, and really start to make some headway is now. And so with that, I want you to join me in thanking our panel. I think we've had some great insights.